Hi, I'm Michael Yardney, and today I'd like to discuss the question, when is this housing boom going to bust? In recent months there's been plenty of talk about the housing boom in Australia, and while some commentators think there's plenty of life left still in this cycle, before we run out of steam, others are already warning house prices are set to fall. So who's right? I'd like to maybe look at some of the factors today. First of all, let's see what's actually happened to house prices. Combined capital city home values increased by 10.6% in Australia over the last year. But growth around Australia hasn't been uniform. You're going to find in Sydney it grew 15.6%, in Melbourne house prices went up 11.6%, and they've been the two big drivers of capital gains over the last year. Why are house prices rising? Well, one of the main drivers has been the effect of lower mortgage rates on housing affordability. You see, despite what some claim, the current low interest rates have meant, despite house price growth, home loan repayments have fallen. They've fallen over the last couple of years, and this has actually made houses more affordable. And of course, this has pushed up house prices even further. At the same time, our strong population growth is increasing demand for housing. What you can tell when you look at the figures is that the lift in birth rate and our particularly high migration levels mean our population is growing by about 400,000 people a year. This is a bit like adding one Canberra to Australia each year. Some people are worrying we're building too many dwellings, but if you think about it, the Reserve Bank has been counting on our construction sector to fill the economic void left by our slowing mining boom. And this is exactly what's happening. Low interest rates and strong demand has encouraged builders and developers to construct more dwellings. Now, much of this has been concentrated on apartments, units and townhouses, where building approvals increased by 40% over the last year. On the other hand, approvals for detached housing rose by just under 20%. So some people say, well, we're building too many dwellings. The answer is not just yet. Currently, demand for housing is still ahead of the supply in most markets. But as many of the large apartment projects currently on the drawing board and those under construction hit the market over the next couple of years, of course they're going to have an impact, moderating, though in my opinion not completely offsetting the extent of the excess demand we currently have. I know some people are worrying that investors are pushing prices too high. Yeah, investors do account currently for an unusually large part of the property market. This, of course, is in part in response to the low interest rate environment we've got, and it's been created by the Reserve Bank, but it's also been driven by investment by self-managed super funds and by overseas investors looking for a safe haven for their money. But they haven't pushed prices too high just yet. If you look at the figures, combined capital city house values are now only 7.2% higher than they were in the last peak of October 2010. And of course, a large part of this is Sydney's price growth and a bit of Melbourne's price growth. But for many states, they're not even above the price peaks of 3.5 years ago. So people ask, well, how can dwelling prices keep rising? Will they keep rising? In my thoughts, the market's momentum, together with low interest rates, relatively good affordability, strong migration, rising household formation, suggests house price growth is going to remain robust in our capital cities for at least the rest of this year. But like all cycles, this one will eventually come to an end too. Most likely stopped by the same thing that stopped other property cycles: rising interest rates. When I look back at what's happened in the past, usually a 20% rise in mortgage rates choked property booms of the past. Now, recently the Reserve Bank has suggested it's not going to raise interest rates for a while. But if the property markets do keep performing as strongly as they have, especially Sydney and Melbourne, the Reserve Bank's hand may be forced to respond. In the meantime, there are some other natural corrective mechanisms at work. I think rising house prices are going to slowly dent affordability and dampen interest from potential owner-occupiers, and at the same time they're going to reduce rental yields, and that'll slow down some property investors. And as more supply comes on stream with the completion of all those apartment blocks currently under construction, vacancy rates are going to rise and rental growth will slow. But in my opinion, it's not too late to get involved in this property cycle, but you really need to be selective. Sydney's likely to continue to outperform this year, given that it's still making up for a long period of minimal price growth. Currently robust auction clearance results and relatively low construction levels suggest strong growth is going to continue for at least the rest of this year, and price growth is going to slow a bit in 2015. In Melbourne, price growth surprised most commentators last year, but the growth in 2014 should slow down from last year to single-digit levels, and in 2015 it's going to be much the same, supported by migration and investor demand. However, investors really better be wary of the looming oversupply of all those new apartments in the CBD. Brisbane's been one of the laggards of this cycle, and it's going to improve this year, driven largely by affordability and increased interstate migration from the southern states. Perth seems to be fairly advanced in this property cycle, but mid-single-digit house price growth is probably going to happen again. So in summary, while house prices nationally are up around 11% from last year, they're really only 7% higher than their most recent peak in 2010. So they've only averaged 4.5% growth in the last 5 years or so. That's not the sort of stuff that makes property bubbles. This means we're working our way through the normal property cycle. And despite the construction boom around our nation, we're still not building enough homes to cater for our population growth of about 400,000 people a year. However, if property prices do keep rising, especially as high as they've been in the first quarter of this year, things could get a bit risky later, and the Reserve Bank will raise interest rates to cool things a bit. But if you're looking to buy a home or investment property, don't wait for property prices to slump anytime soon. As the old saying goes, many an optimist has made money by buying out a pessimist. If you're looking to take advantage of this property cycle, why not have a chat with the unbiased, independent team at Metropole Property Strategists? With offices in Melbourne, Sydney and Brisbane, we have access to every property on the market, but no properties for sale. So why don't you contact us at metropole.com.au, have a chat. Let's have a chat about your current portfolio, or if you're wanting to get in the property cycle, let's see what we can do to put together a strategy to help you get going.